What's up, guys? Just give me a second. We'll get started. Just get comfortable. Give me a quick sound check. Turn off the background noise, actually. I can't find good non-copyright music. I'm really tempted to just try to put on like Tool and the Rolling Stones as much as possible until this channel gets nuked. I don't monetize the channel, so it shouldn't be an issue. Like, you just get strikes. But I'm fairly certain that it does affect, you know, your level of engagement and whether or not the algo, the great algo in the sky, favors you or not. And you know, if I wanted to just talk to myself, I would talk to myself. But obviously, I have this YouTube to have somewhat of a presence and to inform, if not, or entertain rather, if not inform you guys. So we'll get started in a minute. Just give me a sound check. Mic should be good. I know my intro questions are always redundant. It's always a sound check, even though I don't really change anything. But God forbid we get all the way into the stream and I realize, and this is not, it's not like this hasn't happened before, that something was wrong with the sound. Sound is good. Good to know. All right, what's going on, guys? Exciting day. Exciting day. Hope you guys had a good weekend. I had a good weekend. I can't even remember what I did over the weekend. I can remember what I did over the weekend because it was my birthday. Yeah, so it was my birthday. I turned 38. For those who've been following me for a long time, you know I don't really care about like doxing, anything like that. So yeah, I turned the big old 38. Had some family over, spent time with my daughter, and decompressed a little bit. But now we're back to streaming, and by the looks of it, I'm going to be streaming more frequently. Getting back to 2, if not 3 streams a week, ideally 3. Streaming gets kind of tiring, especially when nothing is taking place. But if the market's going to chop and if it's going to range, I think I'll probably dial back the trading. You know, if the juice isn't flowing, there's no point in, you know, constantly showing up and trying to take as much out of the market when conditions are just not conducive to that. You know, it's not necessary. I guess if I was still grinding in the beginning of my trading career, I might, but I want to take the time to stream. I think it'll be valuable. So anyway, before we get started, if you're not a subscriber, if you're new to the channel, please hit the like button, hit the subscribe button. None of what I say will be financial advice, strictly for entertainment purposes only. I try to keep it entertaining. And the channel, the stream, is powered by Bybit. Yes, I work with Bybit. I've traded on Bybit forever now. I've always been a fan of Ben. I remain close to Ben. And yeah, it just kind of makes sense to me. It adds up, right? Bybit made me a good offer, and it wasn't an offer I couldn't refuse, but they made me an offer to be a partner with them, and I took them up on it, right? No skin off my back. I'm going to stream anyway. It's an exchange that I trust. Now, I should say as a caveat that I've mentioned this many times before. If I could have, I would have traded on FTX and arguably would have probably had most of my funds on FTX. If we're being honest, if I was able to trade on FTX, if I was able to be KYC'd on FTX, you know, I am from the United States, and then I also live in the least favorable state for crypto trading because it has, the BIT license has monopoly, so I could only really be on Coinbase. Wink, wink. But if I could have been on FTX as my fiat on-ramp, as my main exchange, even FTX US isn't available in New York, I would have been. So what that means is that before everything took place, I would have been telling you the same thing about FTX. I had my qualms and my issues with the exchange when it came to just microstructure and how things behaved with respect to the order book and odd latency that I'm pretty sure everyone else is familiar with now at this point. So yeah, so I am partnered with Bybit. I think Bybit is a phenomenal exchange. I actually have a sub account that if there is anything that is trade worthy, we'll go ahead and take some trades. So I deposited this amount right here. So we'll take some trades. But yeah, if you're interested in signing up to Bybit, they offer spot, futures, and options. The options is not as liquid as, you know, your Deribit options, but I think that as the market grows, options will become a lot more popular. If you're interested in signing up to the exchange, you still can sign up to the exchange without KYC. We see the direction that exchanges are going in, but they are kind enough to offer some kind of tier that allows you to still remain more or less anonymous in this market, which I think obviously speaks to the ethos of this market. Yeah, that link is below. That is tradebybit.com. All right, so we're going to keep it casual. You guys know me. I'm pretty off the cuff. I do the streams extemporaneously. It's a good vocabulary word for you. I probably should follow script because you guys know that sometimes when I come back from a weekend and I stream, I just speak in ellipses. And I get redundant and lose my train of thought. But we're going to keep it casual because I think that's how I am. All right, so we're going to go over a couple things. I've some things set up. Let me just make sure everything is working right. We have Sierra chart set up. Got my DOM set up. So I spent a good amount of the morning trading the NQ. So what you're looking at right now is it's my DOM. Some of it's cut off by this window. So this is, let me move some of this in. This is the NQ that you're looking at. And yeah, had a pretty good morning trading the NQ. Captured 151 points. This is the TPO chart that you're looking at. A lot of you guys are already familiar with that. So we're going to go over this. We could look at the ES, more or less the same thing with respect to what we're going to gauge or what we're going to gather from it. But as you can see, I have something labeled on this chart right now. So there are a lot of different ways to derive levels and to determine what levels are important to the market. You know, most common one is going to be market structure derived. So major pivots in the market where a ton of participation came in, where the market took a wild turn, right? Where it was rejected either from moving up or down. These are areas where the market returns back to them. You could expect either to be defended or if lost, again, see another, large increase in participation. So areas where things change, major contextual levels, they don't have to just be market structure. They could be, this is one of the reasons why I'll look at a footprint. They could be based on purely just a pocket of volume or the opposite, a pocket, a pocket of no volume. So a lot of times you'll hear me refer to an area as a gap. That's not just an overnight gap. That's not just a CME gap. It's just an area where there was really no two-way trade. So there wasn't a lot of activity that took place. And I'll refer to it as like an air pocket or a vacuum, a gap. These are areas that are important levels, right? And then also news catalysts. So as you can see, so I'll look in the chat in a second. Apologies to not say hi to anybody. News catalyst. So Powell testimony. So I just labeled this pretty basic. Powell testimony hawk. So not an English major, but this is where the market took a shit after Powell's testimony today in front of Congress. So the expectation was that, yeah, he's probably going to be hawkish, but more or less the same. And what I said this morning on Twitter was the bulls are probably going to look for any reason to long. So if he gives even an inch, we're going to see the market move up. Now, the opposite of that was if he was going to say anything with respect to changing plans, an increase in the expected rate hikes or any specific value, which you're more than likely not going to see until FOMC, but something that might allude to the possibility of maybe 50 basis points, strong language, more hawkish than was priced in or expected. And this is exactly what we got today. So this is a really important level for me now from just again, in terms of context, this is where the markets started behaving differently. This is where Powell came out and sort of changed his tune or sharpened his tune or just became more hawkish, and there's no confusion rather around that. So this is now my most important level for bulls or for longs even. From a higher time frame market structure standpoint, if we look at, let me just go to, we'll get off of this because we'll spend time on something where I could go back and forth between crypto. We'll go to global. We'll open up, so we'll open up the S&P, expand this. Let's expand that. There we go. Get this stuff out of the way. So how do we expand that? What's going on? Expand. There we go, down here. Why? Where's my bar? What's going on? Oh, that's annoying. All right, let me just open up a new. Multiple grid, and then classic. Let's keep it classic. Okay, so the S&P. So we're looking at the ES. So again, this is going to be kind of redundant to, I'm sure, a lot of you. But my most important level is 4,200, 4,150, that kind of muddy area. And that's because that is a 9-month long monthly resistance. So on the higher time frame, we've been just bracketing, we've been stuck in a range, and it's really clean. So really clean means all eyes on the chart. Rather, it's an area where everyone can agree on. We're being shut down, no closes whatsoever, just, probes above. But from a higher time frame standpoint, that 4150, 4200, I always give it a little bit more because I want to see more. 4200 level, that is the most important contextual level on the chart to me. We're above the 200, right? So we bounce off the 200 period moving average. This is on the daily, excuse me. So had a nice bounce, but it's more or less in the area where you would expect things to throw back, even from just a mean reversion standpoint alone. So I shared this chart yesterday. You have a multi-day composite up here, so I'm not going to go about placing a profile on this, but you have a really clean range. So range high, range low, where value had developed for, this is the beginning of February, around the first 2 weeks. Break from that. After this pullback, right, we pulled all the way back to that 200-day. So that 200-day is right around 39.49. So we have a bounce there. That's a sort of significant line in the sand for systematic trend followers. You hear me talk about that a lot, but you want to have legs above that. You want to reclaim that, put in stronger market structure. And again, using moving average is more or less going to be your late signal either way. But we bounce off of that, and then we have a 50% retracement, and there's a lot of confluence between that 50% retracement and just a really clean range. So there's really no reason to get hyper bullish into that. If you're looking at the structure in isolation, yeah, you had sort of that bullish range breakdown that I talk about frequently, where the best type of reclaim is a breakdown, take out stops, you clean up a lot of the resistance that would stay in that range because you stopped out positions, and now retesting that is very bullish. But bigger picture, although we were trading above that range and we had sort of a micro pullback here, the more important line in the sand was that 40, 80 level. And that was leading into, again, Powell's testimony. And as this was pressing against, again, that range low, that 50% retracement level, I don't like to think of it as pressing against a 50% retracement. It's just more or less, if you drop something, it is the sort of mean reversion that you would expect, right? Trying not to anthropomorphize price or turn it into a physics experiment, but more or less, there's a lot of times where even if the market is really unhealthy, absent some kind of macro catalyst that's sending us to the pits of hell like COVID, you're going to have a throwback. So this is just kind of a loose zone. So I don't really ever have lines in the sand per se, like specific price points. These are not treasuries, and even those are not trading the same as they had for the last decade. But more or less, this is a zone of where you would expect momentum to dry up, bulls to sort of, lose control, bears to regain control. And as that's happening, dollar is at a significant level. If you looked at it on like the 4-hour chart, pressing towards a low, even if this wasn't expected to hold, you're gonna see that there's some kind of response there. So, the S&P is at resistance. The S&P is at a significant level. The dollar is, within local structure, probably going to bounce. And then, Powell just came in and threw the hammer at this. So for me, this is a lower high that's in the making probably, right? So we have a higher low right here. All right, not a higher low, excuse me. Right here we have the beginnings of a shift in market structure. But throughout this entire structure, we've had similar things where we've broken above highs, had failure and then threw back and then just continued down. So maybe we see something like that right now. Maybe we're looking at a larger target below, below these targets that I labeled from the last stream. So below 39, into 38. It just doesn't necessarily look good. To reiterate, I'm happy though, and I'm looking for longs if we're back above this 40.80 level. And I'm going to tie this all into BTC because the correlation is, for the most part, back. And I'll get into that more specifically. And it's not like it went anywhere, but on a tick-by-tick basis, things did change for the last couple months, where it was a little bit looser, a little bit more idiosyncratic. So retest that. If we're able to reclaim that 40, let's be generous, let's say 40.80. So here's 40.60, here's 40.70. If we're able to reclaim 40.80 and show significant signs of strength above that, for me, it's not just important then because of a reclaim in market structure. So normally you reaccept within a range. This is I describe it as like a carve out. This is your lip. You just kind of, well, it's more like this, right? Ball rolls over the edge. You're at least looking to the midpoint of this structure and then more or less range highs. But not only from a market structure standpoint, we know these are not just cryptos where, TA and levels are going to do the trick. But what it says to the entire market is, hey, this is where Powell really pulled out some harsher words for the market. And I was trying to say something more eloquent than that. And look, after all that, fuck you. It doesn't matter. It's very difficult to bring this market down. So there was a bounce today earlier. So there was a significant snapback, and more significant with the NQ because that's where your beta is going to be, or higher beta is going to be. But more or less, this was a very imbalanced move. A lot of times you'll see that the imbalanced moves fill out before it resumes and continues down either way. So not a good look. Need to get back above those pre-Powell levels because then at least that says or starts to exude, a really significant sign of strength, which this market has done, or rather this market has shown significant signs of strength in the face of what is a constant barrage of just poor macro headlines and catalysts and things that should have brought us lower. Last point, again, just to reiterate what I was just saying, even ties in with like things that should bring the market lower. We're still at May 2022 levels. So all the hiking, right? All of the change in rates, change in the dollar has taken place between this higher time frame range. And this is the longest time that the market has spent in a really long time holding above the 200-day moving average in a bear market. Again, doesn't have to mean anything, but the market is doing a really good job of holding up. So it's going to take a lot to bring this market to new lows, put it that way. New lows, right? Not a stab at a low, but significantly new lows. All right. Why is this important? It's still important because there is now, as far as downside capture, BTC is capturing all of S&P's downside capture. So if we look at BTC, there's obviously a much bigger snapback because that's beta. But there was a period in time where BTC was outperforming, right? Beginning of the year, where that a little bit more of idiosyncratic flow is taking place, meaning just within crypto, had a bunch of narratives, significant short squeezes across the board, capital coming off the sidelines. But more or less, I think we've exhausted all that, and we're going to fall back into just trading like beta to the S&P. And things look kind of exhausted, honestly. But, all right, so we have BTC. We'll look at the profile. We'll look at footprint, and then we'll look at an alt that I'm currently short. I'm also short ETH, so I should say that on a separate account. I have the Bybit account open in the event that there's something that really jumps off the page. All right, let me look at the chat real quick because I haven't said hi to anybody. Let me move some stuff in. We'll leave this for the alts, actually. All right, who do we have in here? What's up? Meaver, John. What's up, Matt? Oh, what's going on, Loma? How's it going, buddy? Cornholio, LA, Cornholio, Kent, Joe. I appreciate it, Postman. There's a channel called No Copyright Sound. Yeah, it just I can't find good things that I like. Put it that way. I mean, you could put classical music on because classical music is in the public domain, and I do like classical, but I don't think it really fits the vibe. What's up? Thank you guys for all the happy birthdays. Yeah, so 38. I feel great at 38, honestly. I do feel great at 38. I think that age is just a number. Honestly, you don't grow up, you just get older. So for all you really immature people out there, keep that in mind. If your intent is to marry, have children, and all that stuff is really good, by the way. My firstborn is 2.5 months old now, and she's amazing. Nice to hear you decompress, horse. Thank you. Stoke, what's going on? Ross. Yeah, using dark mode. Thanks, man. Yeah, using dark mode. You know what? I don't know. You shouldn't have something too light or too dark. And I make fun of people using dark mode or preferring dark mode on crypto Twitter because they are in the basement and in a dark environment. But honestly, once in a while, it's just easier on the eyes. I do prefer light mode though. But I understand some of you out there do prefer this. So anyhow, all right, let's look at BTC. So BTC, I have it on the 4-hour chart right now, and this line, these bands that you see. This is the yearly VWAP. So this is kind of important. It's because VWAP is your volume weighted average price in a lower time frame. From a key level break. Using an anchor VWAP is a useful tool because you're seeing sort of how volume is changing over time, or rather what price most of the volume is coming in. So you have kind of an idea of like a level on average that bulls or bears want to hold if they want to maintain control, especially if you have a lot of volume came in, a lot of open interest that came in, because the loss of that average value, it is kind of it's a blunt tool because you could look at a footprint and get a real exact idea of like where a lot of volume came in and where a big change in open interest came in. Whereas with a VWAP, it's an average. But if you have a significant amount of volume that's come into a new trend, after a catalyst, a news event, using an anchor VWAP, and I'm saying anchored again because this is anchored at the beginning of the move, is good because if you lose that level, and you still have a good amount of that open interest in the market, maybe chances are some of those positions are underwater and they've yet to really to close out. And you could be looking at a significant move. Putting positions underwater is obviously never a good thing. But this is the yearly VWAP. So this is, again, we're bouncing off of this right now. You could treat it like dynamic support and resistance. You could treat VWAPs like that. Sometimes you'll see them just get absolutely smashed through. But this is a good sign that we're holding this. But you could see that we favored that 1 to 2 standard deviation band. We had a really strong trend. I'm not telling you anything you don't already know. If we begin to lose this level, it's just further confirmation that the trend is in trouble. We already see that though. But the point is now you have a more clear idea of where that volume is. If we start trading below this pocket, I think you're fucked either way until you start looking back down towards 20K. But more or less, this was a really strong trend that's taking a breather. So what are we likely to do? We're probably going to range, chop a bit. Hopefully we don't do the thing that crypto is known for, which is it's either moving up with a significant amount of magnitude or, the opposite direction. We're crashing back down and retracing the entire structure. But locally, some important levels. So you guys can see the volume profile on the right. The low volume areas, the ledges, are areas where I want to look to pick trades off. So more specifically, some of the things that stand out, down here, this is like the oh fuck zone. So this is an area where you could probably see a really significant amount of participation come into the market because that's approaching what is more or less, it's not a gap. It's not a complete air pocket, but if we look at where development occurred and where it didn't, where the market spent time and where it didn't spend a lot of time here. Market has a habit of, when re-accepting into a level like this, spending a lot of time there. So filling this entire thing out. So you ultimately want to see that the worst case scenario is we shoot into this level, but really quickly are rejected and find our way out of there very quickly. But before that, we obviously have a few levels to look toward. We have this low volume region at these lows. That is right around 21,004, 21,005. And that's to be honest, I think we're coming down there. Whether we come down here straight or whether we come down here before, putting in some kind of effort upward again, I think remains to be seen. But I think that this kind of stands out as an area where the market's going to come into to test that positioning and, test the resolve of this trend. So that low volume region stands out. We have another low volume region that we're kind of wicking into right now. That is the lows of this current structure, which we'll get into. We have the highs of this range that have been capping us. And that's really it locally. So, I think personally we're going to be testing lower. It wouldn't be completely abnormal, though, like I said the other day, for us to not necessarily test out this low, but test out the high of the range in this low. So kind of where we are right now. But there's a couple things locally that sort of stand out as bad things to me that mean that this is going to be hunting lower either way. But I'm not going to be, marrying that belief. On a weekly basis, so these are our weekly TPOs, here's a gap, right? So I said I'm not going to be marrying anything because if we look at sort of the low of this structure, we extend that moving forward, we see where we've been capped, right? So that is, I said the other day, what did I say, 20,500. Honestly, something that does this and then is back on the top side of the structure, you're just going to be targeting higher either way. The idea of us just floating higher, I don't know. It doesn't seem that strong. Again, I think that this is looking like it's going to roll. But if we're above 20,500, I would anticipate that this gap gets filled out. So we kind of move from this high volume region where we've built up a good amount of volume to more or less the ledge of where things pick up, which is just market structure, right? So between 20,500 up to, probably 20,008, maybe 23,000 tests again. The idea is like this is just an air pocket, right? So this weekly structure is a double distribution. So what that means is the market had established value briefly, coming off of this move, established value between 23 and 23.8, and then had a very one-sided move down. This positioning is unchallenged. So there's really not a lot of trade that took place there. It's one-sided, so that's kind of an air pocket. But it's unchallenged because there are likely people that did short into this and are good, right? They're like, I shorted the breakdown, sweet. But there's really no clean invalidation for this unless it's up here. So you might have shorts that are still hanging on for dear life into this. And it's a one-sided move down. So the thing is, there's no real reason for if the market trades back into that. Think about yourself. If you shorted this and the market's trading back toward your entry, what are you probably going to do? You're probably going to close out. So there's no structure here. It's one-sided. It's very imbalanced. What that means is a lot of times when you accept back in there, it's a pretty quick move from point A to point B, right? So that's on the table. And it does honestly become stronger with every effort that we have down towards these lows that fail. But locally, so that's that 20,005 and above. So, if you want to give it a little bit more, it's 20,006, right? Sometimes it's better to require a little bit more from price. But that's above us, right? So weekly has been down. Weeklies have been down. Trending move, trending week. Within a larger range, right? But trending week, brief bounce, double distribution, which is a trend structure, but it's not like a healthy trend move. So it's a very imbalanced move. But if we look over the last few days, what kind of stands out, and this is Bybit, right? So your structure is going to be different from exchange to exchange, but you have a ton of value overlap. So this is your balance area. Things are really drying up. So your average sub-period rotation size, your ATR, is sub 60 on some days. 58 was the lowest. I mean, it's sub 100, which is terrible. So your average 30-minute candle rotation size, just think about your average 30-minute bar over like a look-back period of, in this case, these are 30-minute bars within 24 hours, so 48 bars, is really tight. So volatility is really drying up. Compression leads to expansion, so you're going to expect that when this does accept outside of this range, it's not something you probably want to fade. Now, you might look at this structure right here and think, okay, so we've had a really significant response off of these lows. This is excess right now. I'd rather see this below lows, right? So you already had that down here. If anything, this was your initial excess of the move. I would have wanted to see that the market came into this level, it was rejected right there, right? So instead, we've been kind of moseying our way around. Now we've put in sort of a double equal lows. So I don't really like this. A lot of times you'll see, this is a phrase that I've said before, like where the market prints, the market will trade again. This move was just positioning. This was shorts getting trapped in the pocket, waiting for a larger breakdown. You had mean reversion in the S&P and the NASDAQ. It's a little back and forth during the speech. And all you did was fill that inefficiency out. BTC traded back in the range because it's just higher beta, right? So if you looked at like the S&P, if you look at how much the S&P mean reverted initially, okay, it was kind of just the underside of that prior range. The NASDAQ is higher, right? The NASDAQ had a greater throwback to basically where Powell's speech became, his tone really, took a harsher turn. If you look at BTC and ETH, well, they're just higher beta, so they just threw back even further, and they're thinner. So honestly, when I look at this, I'm not surprised, right? It was a bunch of people getting, hold on one sec. This will make it a little bit more obvious, trapped at those lows. So if you look at this low, I'll take away the CVDs, make things a little bit easier to see. After this breakdown, what happened? Well, you had longs building up here, so sort of passively just building positions, thinking that range is going to break upward. Snap those positions, right? So open interest is cracked into this low. You have a massive increase in open interest. Well, I mean, it doesn't take a genius to think that that's probably not dip buyers at that point. After the market is in like, the market is splashing downward and looks like it's going to start cascading. You're going to have people that are going to panic and start shorting that breakdown. So that's exactly what you had, right? You had a bunch of sellers come into the market, and you just squeeze them out. Now, right now, I just think we're kind of just finding value between that point, but I don't think that it really means a whole lot with this being, a sign of a reversal. I think more or less, I think it doesn't matter, because I think if we do trade above that 26-25 level, then my opinion doesn't mean shit, right? Then maybe we'll trade back down there in a couple days. But the way that this is acting right now, it's not like this stands out as like hyper bullish to me. This just looks like it's short squeeze by people getting trapped at the low. If anything, now when we have equal lows like this, they just become more or less a target for me. Because if you were to compress this entire structure, you think about equal lows, it's kind of like the way that you would look at poor highs and poor lows in a single profile. You'd say, all right, the market was able to like come up to this level a couple times. It would have been better if we took this low out and then had some kind of swing failure, whereas we just allowed whoever was down here long to begin with, allowed more position to reaccumulate. So there's really no tap of liquidity down there. And if we look at Binance, because I'll double check, no, you have relatively equal lows right there as well. So if you're looking at, possibly a liquidity hunt, well, you want to see that we've taken out that side and trapped, or rather stopped out those longs. And the reason why the market moves up really quickly after that is because if you have longs that have stops and, you have all these OC orders built up, so all these longs are future sellers, right? So anyone who's long down here is a future seller. If you stop them out and then you reverse back into the structure, well, you've created an air pocket, and then you've also taken out future sellers. So you've taken out any possible friction that might have already been built into the market if it's going to reverse back in the opposite direction. So instead now we've just added more future sellers to the market. So you have a bunch of stops down there, and I really doubt that in these conditions we permit that kind of slightly higher low. And this is looking at all exchanges for the most part that are relevant, Bybit, Binance. So there's no mistaking that low wasn't tapped. All right. So plays. Honestly, I'm short ETH, so that's what I mentioned that earlier. I'm short ETH, but I got a really good entry. So I should have taken this in the NQ. My ETH short is this second high. So I'm still good right here. Honestly, for this kind of setup, I have a relatively loose stop. I think it's something I could monitor. But for this kind of setup, I personally am not against having, let me set this up for ETH actually. Bear with me. So this was, so it's a little different because it's on Bybit, but this is, they're relatively close. Slightly, well, this was earlier in the day, excuse me. So let me just make sure I have my day profiles on. There we go. I'm not opposed to honestly keeping my stop above the high of the day. You have yesterday's high taken, right? Above the high of the day is not a bad risk to reward if we assume that when this breaks down, right? And again, so that is right back here. Let me use a native drawing tool so I give you a better indication of what I'm looking at. Turn this off. Same thing for ETH, holding holding yearly VWAP. Here we go. Sec. Whoops, not what I want to do. So this is ultimately what I'm looking at for my short right now. So one sec. Can you guys see that naked POC? Is the chart light enough? I think so. Hold on one sec. There we go. Oh, I'm putting it on. Sorry about that, guys. I'm putting it on the wrong profile. I'll make it red so it pops. There we go. All right. So we have a what's going on? There we go. Naked POC, right? Ooh, I had it perfect too. Look at that. I'm never shocked at the amount of times I could guess the exact price or where something exactly is on the chart after looking at these so frequently. All right, so the short setup. Sorry. Above the high of today. Because honestly, I think that if we ran, we're within yesterday's profile. We ran these lows. I have my opinions on why we have to double tap with respect to BTC more importantly than ETH. But if we're above this range, after this kind of effort at the lows, again, for BTC is 20,005. For ETH, it's, I'd say, the range high today. Or, excuse me, the high of the day. Then my short is off the table. But until then, I think that this naked POC right around 15 is a pretty good target. Beginning of this move up, so beginning of the move off of the lows, that naked POC is just on February 14th. That is the high volume node of the day. So a lot of times you'll see that these are good areas to take profit into. There's a good amount of liquidity at these levels. They do slow price down a bit. They are kind of sticky points. So I'll leave that open. And again, I'm not really worried about what price is doing right now because I think it's more or less expected. This kind of snapback, and now we're just balancing out. We're just forming sort of a value area and a range between where our mean reversion occurred. So we'll keep an eye on that. If it starts floating upward, and again, this is why I don't have like a hard stop right there. If it starts floating upward and shows constructive price action, above today's POC, which is kind of where we're messing around right now, but more or less probably above like 15, 1570, then I might consider closing a little early or waiting for further development. Hopefully this all makes sense. All right, let's look at an alt that I mentioned this morning. Alt flows. So we're looking at mask. Hold on. Yeah, so price fell. So I just caught your the scammers. Interesting name. I just caught your comment. So price failing to dump is bullish, and that's why I have on that NASDAQ and S&P chart. That's why I have that line clearly written, so that not only like if we're back above that level. So to reiterate, not only if we're back above for this is the NQ. If we're back above 12,323, right? If I didn't label this, I might just say, okay, yeah, we're back within a range. You know, we put in a strong move below that low. You know, maybe this is looking like a flag in continuation. That's meaningful from a market structure standpoint. But with this, you know, at least by leaving this here, that doesn't happen. And I just treat that like more or less a level retaken. This is much more significant now because this is where Powell really turned up the heat. Although, you know, you can make an argument for we still have a bunch of headwinds this month. CPI this month. We have FOMC. But like, let's say we're at FOMC, you know, we get to the FOMC and they're raised by 25. I mean, imagine if they raised by 50. I don't think that this would happen where the market would recover. But if the market is able to recover things that ultimately should be really bearish and rebase out in the face of that information, it's just showing you that the market is really strong. You know, the market, the question is, where's the market trying to go? Is it doing a good job of getting there? If it's trying to go down, you know, if all things say down, but it's not going down, well, you know, clearly the path of least resistance is not down, and you want to be on the side of the heavier hand in that case, which would be buyers. All right, so we'll take a look at Mask. So I shorted Mask. This I've been short from a little bit higher, obviously, but with respect to Mask, I shared something this morning on Twitter, and I was talking about STX as well. So last week now, I talked about why I was shorting STX, and this was at 90. I was short from 94, 96, and I talked about APT and OP. So optimism and what's it called? Aptos, right? Is that which one it was? Yeah, and how they had really negative funding prints, and how a lot of times in a bull market, and when this trend is, you know, we have market breadth showing really significant signs of strength, and, you know, momentum is still there, and there's no question of anything changing. Those prints are good positioning tools to lean on if you're looking to punish the other side, right? If you're looking at possibly a short squeeze in the making, you know, again, context matters. There's been a lot of times where at the end of a trend, when momentum's drying up, when you could kind of feel it in the water, that those egregious funding prints, whether it was Aptos or Optimism, being like 27 basis points, 30 basis points, that's a sign that actually sellers are taking over. So both of those occurred at the highs, and you might have been thinking up here like, oh, this is going to squeeze much more. Reality was that someone was getting filled with a massive short in derivatives, and there was no more spot buying. So you want to decide with them because they were going to be in the money relatively soon. And there's a lot of times where you'll see this positioning build up and then they'll just dump the spot market. It's only bad if they have to hold that positioning and the market isn't going anywhere. Otherwise, the cost of that funding is going to be nothing in comparison to the 20, 30% drops that occur in price, right? They're going to be in the money with their positioning. So when it comes to Mask, I'll pull up Levitas, give you an idea what I was looking at. Perps, go to Binance, and then we'll just sort this by funding. So I think it's shifted to some degree now. So yeah, now it's down here. but the APR is still negative 26%. So that would be, that was earlier. I forgot what it was earlier. I showed it on Twitter, but there was a significant amount of shorts at open. Use this real quick because this will be a little bit easier. So into this move up, you'll see that although price is grinding up, your perp CVD is up, funding is going really negative. So the reason this is because someone is actually on the other side of this, absorbing all of that, enough to keep the perp price below the spot price, regardless of the fact that the spot CVD is down. So normally you would look at, if you just looked at these two things, so your perp CVD and your spot CVD, if you looked at this and you said, hey, what kind of print is this going to give with funding? You'd say, oh, it's going to be positive funding, right? Because spot's going to be trading below, the perp's going to be trading above spot, perp's going to be trading above the index, yada, yada, yada. But instead, you have funding that's going more and more negative, and you can see it's new position because you have a really significant ramp up in open interest. So the reason is that there is a lot of buying that's taking place. This is chasing an upbit listing, but all of that buying is buying into someone that's providing a ton of liquidity up here and enough to the tune that they're able to keep the perp price below the spot price. So, you have to understand this dynamic because otherwise you might look at that and think, oh my God, this is going to turn out to be a massive short squeeze, when really it's only a massive short squeeze if all of this, right? So we'll look at the peak of that open interest. We'll give them this much. They probably have some more bullets though. So this is where open interest peaked. The only time that this is in danger of a short squeeze is if we're trading above their, let's just say their average price, right? Or above their worst price, right? Their highest entry point. So, arguably that's above 422, and more or less, you probably imagine it's above 435. So unless the market comes up there and you don't see a material change in that open interest, right? They're not closing that out. Then maybe there is an argument for a much larger short squeeze. At that point, you're potentially putting them offside. Though, like I said, maybe they have more gunpowder. Maybe they just nuke this down even more with a large sell. But they're in the money. So that seller up here that provided liquidity up here and sold passively and created that wall, they're still good. So it's not a short squeeze. And what probably happens now is that print entices, one sec. That print entices a ton of longs to come in that think, oh, now this is a short squeeze. And I'm going to get filled for, I'm going to get paid on that egregious funding, which is what? How bad is it now? Well, a single interval print is not that bad. It's much lower now. But, you're enticing longs in, and then that happens. And then what happens? They probably unload more spot, unload more on perps, and just overwhelm any kind of buying. Because clearly the buying just isn't there anyway. You don't have a move like this where, and you have to take this into consideration, what's taking place across the market, which is, things are just getting hammered. And this is a trend shift that we're seeing. Let me just put mask on here. So what happened? We had an up-it listing. We took this high. I'm still good in this short. I'm happy to be in this short as long as that whale is in this short. So they're not really a whale, but I'm good as long as they're good. So I'm going to keep an eye on that open interest, keep an eye on that positioning, and I see no real reason to close this because I think this ends up just more or less just bleeding out. I think a lot of alts are going to bleed out. For example, something to be mindful of is if you're going to be shorting alts, just keep in mind that this is a high time frame move, right? So we're talking, it goes back into November for something like Fetch AI. Okay, so big ships turn slowly unless it's unless it's a catalyst that sends us much lower. If this is just a market sort of falling on itself now and losing momentum and it's going to roll over time, this took a while. This will take a while too. So, as a corollary, you have this as something to look towards where it looks like it's going to roll over. And the next thing you know, if you're shorting here, you're probably good still, right? I think that you're probably good for something like that, but maybe it leaves you with something like this for the next month and a half. And then maybe you're rolling over, but you have all that time in between to second guess yourself. So So just keep that in mind. That a lot of these alts, so even this, I mean, from a contextual risk reward standpoint, that's an incredible short. A lot of alts are probably changing direction, but it's going to be choppy. And also, like, mind you, it's not as easy when you are an incredibly overflated market, because it's not like there's a ton of leverage in the system right now, a ton of positioning in the system. You're still ridiculously off the high for a lot of these things. So, and you're also dealing with predatory market makers and predatory traders as well. It's very PvP. So it's not going to be as easy as just riding these things back down to zero. It is if you are just managing them on the weekly chart, right? If you're looking at FET, I'm looking at this and I'm thinking this is going to take quite a nice breather. But if I start looking at this intraday, I'm going to get thrown out because it's going to probably stab back a few times. And honestly, these are thin enough to where it's not like it takes much to get the market moving back in the opposite direction and to hunt this high again. So you just have to know what you're in store for. Hopefully that all makes sense. I honestly can't say that there's anything right now that looks really compelling from a long standpoint, because I do think we're in for a punishing amount of chop and ranging behavior. So if anything, and honestly as well, there's not a lot of things that are close to their invalidation from the short side. So even if you're looking at FET, right, from where we currently are, that's a 50% move back up to the high, which would be reasonable. And then leave us with something like that. So I think you want to be monitoring these, placing alerts. A lot of them have already been in a downtrend for the last couple days and the last couple weeks. So you want to start identifying the levels on the chart that invalidate that. So if these are breaking down, what is invalidating this downtrend? I mean, I'll start, for example, on 1 inch, just to give you an idea of how I would look at this. So is 1 inch going to break further down? I mean, possibly. Again, where are we in the larger cycle? I think Bitcoin and ETH are bottoming out. So it's reasonable to expect that these probably are too. They're getting to the point where, it might not be a lot of sellers left in these, or people that are able to sell, and they could chop for a while, but doesn't mean they have to make tremendously new lows. But if we're looking at 1 inch, for example, just higher time frame market structure, would I want to be selling this right here? No. I mean, I'd probably want to get something that throws back and leaves me with some either lower high to define that's closer to this high. If we look at sort of the 50% level, it's right around there as well. I'm going to be setting an alert on the way back here so I know when to start monitoring this. Do we get a failure above that high right there? Do we get something that puts in an exhaustive squeeze back, which would be even better to sell? Because again, this has been one-sided. You get a squeeze back up, everyone gets bullish again. You sell as close as possible to that high. But yeah, a lot of these honestly are back at levels that make them not the most attractive. Even you could be right about direction over time, but you could be wrong about the trade. All right, so this is already, basic attention token. Does this have any reason to keep going up? No. It's 26% off the high though. CFX. This is one that I was scalping on the short side, but a good friend had mentioned that they have a really good marketing team, and this would be one tweet to send this back to the high. So I look at this and I say this thing is toast. Like, if everything's going to pull back, the things that pop the hardest, the narratives that are drying up are going to be, if they haven't closed out these gaps yet, they definitely will. So what do I think? I think this absolutely closes this gap out, but what kind of ride is it on the way down, right? Do we have them posting something on Twitter that sends us back up here and then we have a failure? I mean, it's a pretty painful ride if that's the case. So, I mean, I'd rather get something that throws back because we're off the high now. This is 50% off the high, right? Sometimes it's good to look at this with a non-log chart so you see what you're selling into at this point. So I'd rather have something that is back in this territory, at least close to this window, rather than anything in here to sell. Now, yeah, of course, these things can just, a lot of times, like Aptos, I was shorting the trend in Aptos. And I say trend because it's just bleeding down. And this might just bleed all the way down. I've seen alts do this before where it's just bouncing all the way down, but overall the direction is down and it's just a bleed. I don't know. I don't think you should operate thinking that's ever going to occur because it just takes one event like that, 30% bounce in a short amount of time to just fuck you. So yeah, I don't know. I think that's kind of it. Long trigger on ETH, sir. So I'm short ETH right now. But if we're back above yesterday's high or today's high, I'll reconsider things. Let's see. FTM. Just getting this weekly range. So FTM, this was a really bullish move similar to DYDX, where this is the best thing you're going to get, where you have a break in market structure outside of a high time frame range and holding that as support. These are obviously breaking down. I would expect that the first area that we find support with DYDX is a mid of the range right around 186. And if we extend sort of the same logic towards FTM, very clean range. I mean, this one is even more TA, right? This is like an Adam and Eve pattern. High volume, high volatility splash, low volatility rounded bottom. And then the best case is this is your bottom, right? So many TA things, cup and handle. These are things that I don't ever consider, but it just from a TA standpoint, it's like the prototypical pattern for a bottom or the epitome of that kind of bottoming out pattern. But right, if we're going to lean on this structure and we lose it instead, we're back underneath this high, this pivot, I think that this is going to bleed into the structure and you're going to look at probably the next significant bounce is right around midpoint of the range. So I don't, unless these, for the long side of things, you need to see that the market is back outside of this range. So back above 50, back above 46, and constructively. So forming a low above that, grinding back up, constructive price action, not what it's doing right now. Long trigger. I don't have a long trigger on STX. I said I was short STX last week. Is Captain Ahab your alt? No. Do you hold any spot bags? Yeah, I have spot ETH and BTC, but I've been hedged now publicly for a while. Going back to probably 2 streams ago, I talked about hedging as close as possible to 25. So it turned out to be the right decision. I forgot who was giving me shit about it, but you always get shit. But around 24K, I said I was hedging, and someone said it was too late. Because I was hedging at 24, I was hedging at 23.9. But again, I think the reasoning was pretty clear. Pretty ugly monthly move, or the monthly was shaping up to be pretty ugly. And then if we look at the weekly structure, we had this swing failure, right? And this is the most important line on the chart, this level. So I think that'll cover it though, guys. So I think I covered a decent amount. Wish you guys well. Again, so that link below, you're still entitled up to $35,000 bonus depending on what you deposit. But if you deposit $1,000, you still get 10% back. When will you get EXO and get Nance on desktop? I don't know. I think that's everything I want to cover. Our last question: has having a newborn impacted your trading schedule? It's actually just made things tighter. I have the so we went to a doctor's appointment the past week. So her second appointment for her with her pediatrician, and standard questions, doing height and weight, all that. She's a perfect baby according to the doctor. But she was like, her sleeping schedule, what's it like? And we are like, well, she sleeps all through the night. She's like, wow, that's abnormal. And my wife got worried because she heard the word abnormal, but she said, oh, that's a blessing. So my daughter sleeps through the night from 9 p.m. till 5:30, 6 a.m. So I get up around 5:36. Now, in between the middle of the night, she wakes up for 10 minutes and then she goes back to bed. But she pretty much, there's no waking up in the middle of the night for diaper changes or for bottles. She sleeps sound throughout the night. So my schedule actually is nice because I wake up, I spend an hour with her. My wife's a stay-at-home wife, and I'm at home, so it hasn't hurt my trading schedule. It just made me become more aware of like how I use time where I might have previously wasted it more. I'm a little bit more, I have a sense of urgency with how I spend my time because honestly, what I like to do is spend as much time with my daughter as possible. So if there's no reason to be in front of the chart, I am not going to be in front of the chart. Now, you'll see me tweeting throughout the day. Some people are like, what are you doing out there? You're still tweeting. I spend all my day with my daughter, honestly. But I'm one of those people that I have a computer I have 4 computers. So I have 2 laptops. I have a Mac, and I have my trading desk, and those are around the house. So I could always tweet. I'm always near a computer. I'm always near my phone, and it's just a habit at this point. But yeah, still get to go to the gym. My wife and I have a good schedule. We're mindful of each other's personal time and how the other needs some time and to do things that they need to do, and you make it happen. So, all right, guys, that's it though. Appreciate it. I will be going live again.